Hi there traders, this is Brad Gilbert with the guide to the week ahead. Alright, now let's just get into it. The Bank of England on Thursday is going to be a major focus. But just first of all, start of every week you should be going back through and looking at the key themes and direction for the major currencies. Now we had the non-farm payrolls on Friday. The Fed's Dudley came out and sort of offset the weakness in those numbers with some comments saying that they're on track to raise rates, which I think is a whole load of baloney. Now the China Central Bank, okay, pledges policy fine-tuning. Yeah, dream on. Sterling hits 11-day low. Now, see how the networks are sort of changing it. 18-month low, now it's like an 11-day low. This Brexit, Bremain sort of situation is the key thing. Now, let's just have a look at Dudley, right? He is one of the key guys at the Fed. And he has come back out and sort of told the New York Times that they're on track to be raising rates a couple of times in 2016, which I think is, you know, really against the economic numbers. Okay, he wants to keep economic growth going in that perception, but I don't think it's really there. And the reason why the markets move is because he's seen as being in line with Janet Yellen, okay, who really does have the controlling vote at the Fed. Now, let's have a look where the US dollar finished. Okay, non-farm payrolls, dollar index a bit higher here, going up up towards that 94 level. So we've got a clear sort of dollar direction, I think. US equities closed on a positive note. Now coming back to those non-farm payroll numbers, up 160k, they were expecting plus 200. The other two components, the rate and the average earnings, right on expectations, so no real change there. What we saw in the currencies was a bit of weakness, initial weakness, and then obviously Dudley's comments have come back to give a bit of US dollar strength. So let's get into the major currencies, and you want to first of all each week come into the majors and have a look where the key technical levels are and where the current market bias is. So first of all, the Aussie dollar, looking at the Aussie, okay, weak numbers. The big thing in the death knell here was the RBA change of inflation expectations to 1 to 2%. That's almost like a policy change. They're expecting really bad times ahead. Now levels on the downside, we're really looking at Fibonacci levels, 73.30 to 50%. That's probably the first level that you want to keep a close eye on. As I said, the Aussie is in a bit of a downward spiral. This is following the central bank as well, so that's probably more intrinsic in-ground into the market. Kiwi, simply following the Aussie, okay, the RBNZ will be forced to probably cut rates again, especially the way milk prices have dropped off again. Economic conditions aren't great, and with their biggest trading partner, Australia, it doesn't bode well. So this is going to follow the Aussie. We've got a couple of levels here, but if you want to come back and throw in some Fibonacci's on this whole retracement as well, we've got a couple of levels to look at. Most importantly, probably that 67.84. Right, that's probably your next level, and it comes in line with that support line. So probably a bit of a double whammy. If we do start to see the Aussie slide, this could be on the back of Chinese data, don't forget, then you might start to see a bit of a run through those levels as the pressure builds on the central banks in Australasia to sort of keep cutting rates because things aren't going that great. Now, dollar yen, this is one of the key things. Now, dollar yen was pretty much off the radar all week last week. Japanese holidays, Tuesday, Wednesday, Thursday. We're back in here now, and the Bank of Japan may spark up. Now, it's currently trading sideways with a slight little upward bias. If the Bank of Japan come out and start jawboning, talking up the whole prospect of you know, negative rates and building this thing up, well, then we're going to see a massive move through 107.61. I think that's the level to be really concentrating on. Previous lows, hasn't been above that level for some time. Now, coming back into Euro itself, it has drifted off, okay, with after the ECB bulletin, I should say, last week. It has got a bit of a negative tone to it, bit of dollar strength, but really it's not really running just yet. Okay, and looking at these Fibonacci levels, 112.90 looks like a bit of a key level to focus on the downside. I've been looking to get short Euro, but reluctant to because it keeps bouncing back. The actual Brexit, the EU referendum in the UK is causing a bit of a kerfuffle because it's putting an underlying bid tone in Euro sterling, and that's where the buying for Euro is coming from. So just keep an eye on that. 112.90, probably your key levels. You've got a couple of short-term support lines there as well, but they are sort of at current market levels, so it's pretty hard to, you know, put in some serious capital into that. Down through 112.90 probably is a bit more structural, and we hopefully should see it go by then. But if the UK referendum isn't out of the way, well then, you know, this thing could just easily keep rallying. Okay, so now coming back into sterling, this is the major focus for the week. Got UK manufacturing production numbers out. We've got the Bank of England. We have had some really run of negative data, the PMI data last week. Manufacturing, services, construction, all weaker than expected. We have seen it drift lower. So it's very important we look at the inflation report on Thursday as well as the Bank of England rate decision and statement, because this could really put the cat amongst the pigeons. If they don't change, then sterling has room to rally. And don't forget, half of this move is probably just the Brexit polls winning again. And don't forget, the cycle of those moves will be it won't be sort of even. They'll focus on the Brexit, then they come back and remain, okay, that the UK is going to remain in the EU, and we can see this thing back higher. So you get a Remain up and a pretty neutral Bank of England. Sterling's a lot higher, and some of these major crosses, sterling yen in particular. All right, dollar CAD. Now the funds, okay, not much in those Friday employment numbers in Canada. Dollar CAD has had a bit of a relief rally back up to into the high 129s. We do have a good level here, Fibonacci retracement level at 129.85. You might want to have a look at that. And we've got 130, the figure, big round number behind it too. So probably providing some resistance, and oil will not give up. Okay, it's dropped back to, it's rallied, I should say, back to 45.5, and that should put some pressure on the downside in dollar CAD as we go into sort of probably Tuesday. Okay, probably not much in it on Monday, but Tuesday probably look to be potentially getting short dollar CAD. It really, if you get oil above $46 a barrel, then it's pretty much on the cards. All right, so now how can you sort of really focus on the key events coming out? Well, it's pretty simple. If you've got something like Forex Factory, which everyone should have access to, just go in and highlight the high impacting data releases, and then you can really get a microcosm of what's coming out. Okay, so earlier in the week, you can see that there's going to be a fair amount of tension on the Kiwi. Okay, we've got the financial stability report out of New Zealand, and Wheeler, who's a pretty aggressive character, he's speaking a couple of times there as well. So focus on that, and then you come into the retail sales figures on Friday morning for New Zealand. So Kiwi definitely on the radar this week. Fine tune it. Understand that currency pair is pretty illiquid though. Now this is the main focus and why we've got the UK highlighted. You got US and UK data all week. It's going to be a big focus. Coming back through those crude oil inventories, by the way, have a look at that for some direction for dollar CAD. It has been a bit of a market mover of late. Now the Bank of England inflation report, bank rates, policy, I mean the whole lot. Plus finishing up with Carney speaking about the whole thing. This is where it's going to get a little bit loose. And I say loose because when Carney speaks, he could run a positive tone and then hit it with a negative tone, and then you start to see sterling all over the place. What we want to see is if they don't go to a dovish tone, and they have been talking rates up, well then sterling is going to be a lot higher. Now just to go back and put everything else on here, you can see where all the noise is, all these other low to medium impacting data releases. It doesn't mean they can't impact, but the high impacting ones will be the key ones the traders look at. Bank of Japan monetary policy minutes on Monday could be a bit of a important thing to see what dollar yen does, although I would expect dollar yen to rally initially with those US equities finishing on a positive note. Okay, now in the FX Trading Hub, we will be covering a number of releases: the Chinese CPI, UK manufacturing production, the Bank of England rate decision, then also US retail sales on Friday. So you'll find all those bits and details in the live trade zone, and you can start to prepare your week, quicker. Get it organised, get your charts up, work out where that bias is, work out what the key releases are, so then you can go from there. Now the weekly Forex picking challenge, this is starting to get a little bit more popular now. We've finished the forum, so have a look. And funnily enough, well not funnily enough, this week's challenge is on sterling. All right, and that's obviously for good reason. We've got UK and US numbers out all week, so have a look at that. We're looking to pick the closing price of sterling on Friday, but you do have to have your pick in by Wednesday's manufacturing production numbers. All right, so have that tuned up, and from that, have a look through that forum. You'll find a whole range of bits and pieces. Don't forget to add your profile in there, and that's pretty much where the action is there. It's a good hub for sharing trade ideas, general discussions on currencies, that whole 9 yards. All right, now, so once again, get your trade station set up. You've got your major currency pairs there. Just fine tune everything. Make sure you know where those key levels are so you can start trading at the drop of a hat. Okay, we know where the key releases are. We know when to focus on specific currency pairs. So just fine tune that and we'll go from there. It's going to be a good week, guys. As I said, sterling probably the major focus. Keep a very close eye on things on Thursday. It's going to get a little bit interesting with Carney speaking. Have a good week and we'll see you in the trade zone as we go through. Cheerio.